Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you enjoy this program, give us a like, subscribe, tell that algorithm. My guest today is Ganesh Rengaswamy, Managing Partner at Quona Capital, a venture capital firm dedicated to emerging markets. They have just raised a fintech-specific fund, so I spoke with Ganesh about the state of fintech, financial inclusion, what he's investing in and not, and what fintech looks like in the new macro environment. Ganesh Rengaswamy, welcome to DigFin VOX.
Thank you very much for having me, Jay.
It's my pleasure to have you, and it's an auspicious time for Quona Capital. You're a venture capital business with headquarters dually in Washington, D.C. and in Bangalore, where you are. And you focus on fintech in emerging markets, or rather investments in emerging markets, and you have just funded your third fund to the tune of about $332 million to focus on fintech. So 2021, we saw a huge boom in VC funding in general, and specifically a lot in fintech. This year has been difficult, to say the least. I think we all know the basics of that story. And yet here you are now coming out with a pretty sizable fintech dedicated fund. So why fintech and why now?
Sure, thank you. And thanks for that. Really appreciate the context. Just maybe to answer your question, I'll have to go back a bit and give some context on Quona. And the three of us who founded Quona come from a very so similar backgrounds. We have similar backgrounds in terms of having been entrepreneurs and investors in tech, fintech, digitization in various countries, started our careers in the Valley, and were deep tech operators before we started this. We over time, I think we have kind of realized that we look at fintech as a space that we get excited and excited about, not necessarily because it helps create cool financial innovations, but more importantly, we look at financial innovation and fintech as sort of oil that greases the economic engine, and financial innovations can be applied across varied sectors. Whether it's in digital health and fintech, mobility and fintech, supply chain and fintech, agri, food tech and fintech, so on and so forth. And so it gives us the fortunate vantage point to back entrepreneurs who can make a phenomenal difference across various verticals. And financial innovation or fintech is sort of a tool, means to make that happen, and not necessarily the end goal. But and it gives us a great, fortunately, a good platform, and it's a space where we happen to have a fair bit of expertise, both as entrepreneurs and investors from before, and that's why it makes it made a lot of sense for us. And the last point, there is, we are very much focused on global emerging markets across Asia, Africa, LATAM, and Middle East, and we invest in 14 countries today. And we over a decade or so, we have built very unique expertise in being able to understand consumers and SMEs in emerging markets, which happens to be, as a differentiated skill set compared to SMEs and consumers necessarily in more developed markets. And that's actually helped us find some very exciting financial innovation, entrepreneurs creating very exciting financial innovation that which is the kind of stuff we like to back.
When you said that the ultimate use case isn't fintech per se, but it's in agriculture, or it's in some other e-commerce or some other facets of economic activity, where does fintech come in? Are you finding, like, are you looking at companies that are fintech plays and that they're just bolting into different kinds of use cases, or are you looking more at founders and companies that are not about fintech but need to have some sort of payments or credit or insurance or some kind of financial aspect to realize their mission?
Yeah, great question. I would say both, but just to give you maybe examples, we obviously back opportunities which are in classical payments in terms of being related to making payments and remittances efficient to emerging markets, or SME credit or consumer credit or insurance or so on and so forth. At the same time, over time, what's happened is financial, digitization and fintech have kind of evolved to become more experiential and sort of point of experience and point of and contextual, and hence we are starting to see that these solutions can be embedded as a part of the whole vertical supply, a certain vertical supply chain. Like we have a portfolio company called Arya, for example, in India, which is the largest grain commerce company in the country, post-harvest grain commerce company. So they go from aggregation at farm gate all the way to market linkages. And along the way, they do warehousing and collateral management. But all of this, because they have control of the produce right from the farm gate, it gives them the ability to provide collateral management to banks, and also gives them the ability to provide financing to farmers, and to sort of wait it out so that they get the best price there for the produce, because Arya also creates market linkage, and a lot of times you need to figure out how to match supply and demand to help farmers get the best price. So is it a fintech solution? Maybe, may not be, but it's an integrated solution where the financial innovation actually makes a big difference. And part of how they underwrite these customers is through the data that they gather as a part of owning the produce right from the farm gate. So that's one example. But look, we have 60 plus portfolio companies, some which would be squarely fintech, but some which would be very much integrated solutions like Arya.
Yeah. Okay. Thanks. We're in a new environment. You've done a raise at a very interesting time. Not easy to get funding right now. So I guess congratulations are in order for that. But
thank you.
We've got, obviously challenging macro conditions, maybe not as challenging in our part of the world as they are in the West, but nonetheless, the era of free money is definitely over. Inflation is making itself felt in one manner or another. Interest rates are on the rise. And this is putting a lot of strain on many types of businesses. It's good for some, but difficult for many others. How is that going to color the opportunities that you've got as you look to deploy?
Yeah, great question, and absolutely very topical. I think we are super fortunate to have raised the fund at the right time. And this was supposed to be a 250 million fund, but given how we have performed and the faith of our LPs, our investors, we were actually able to raise a well oversubscribed fund. And we invest really in early stages, so between seed to Series A, right? So we are really a classical venture capital fund in that sense, and arguably the largest, focused exclusively on emerging markets for fintech. So there is frankly not much of a slowdown there. The good part is there is enough slowdown to give us more time to be able to evaluate things with lot less FOMO, and with lot more intentionality and deliberation. But at the very early stages, seed and Series A, I think you're still seeing fairly interesting opportunities coming along, but you're able to catch your breath, which wasn't the case last year. So this is a great time for us as Quona, because that's where we are looking for exciting founders. As you go down the chain in terms of later stage rounds, yes, absolutely. If you go Series C and beyond, these are very stringent times where downstream capital is I think evaluating opportunities with lot greater, I would say, discretion and diligence at this point.
So at that Series C and beyond, I guess really now you're preparing a company to go IPO, and that's the name of the game. So it's all about boosting those valuations, hitting the next milestone, hopefully finding an exit. But exits right now are super difficult. In this new environment, which you're coming in at the seed and Series A level, what kind of fintech models will work best? What's going to be the kind of stuff that excites you and you think has good prospects? And of course, concurrently, what are you going to stay away from?
Yeah, as you can imagine, it's something that it's quite dynamic and keeps evolving, and is a significant point of discussion within Quona. And also, again, contextually, we invest in vast number of markets, and the answer is not the same for each of these markets. But directionally, I think we are quite bullish and excited about infrastructural opportunities. If you look at financial services infrastructure, there are couple of maybe big contextual points. One is a lot of the infra around banking, credit, wealth, payments, insurance, etc. is probably been around for 2-3 decades and not changed fundamentally. And the added to that, the real world has evolved quite a bit. I think the digitization, leverage of data, cloud, learning models, artificial intelligence models, mobile, as a platform, ubiquitous platform, etc., have led to fundamental shifts in how consumers, SMEs, etc., experience services, and how services the products can even get delivered. So we see fundamental shifts in infrastructure likely to happen over the coming years, and that's in general something we are bullish on, because sort of re-architecting infra is going to be a big theme. That's one.
Okay.
The second, which I've already referred to multiple times, I think even this conversation, is that we just believe the whole world is going to become a lot more contextual in experience and less transactional. Like in the past, a lot of financial services still about decade and a half ago were more transactional. I think it's shifting significantly to becoming more contextual, and the ability to deliver better services is enhanced because of that, due to the fact that contextual services have more data and understanding to be able to make a credit decision, or to be able to make an insurance underwriting decision, or a payment fraud decision, so on and so forth. Is it mature? Absolutely not. But are we starting to see green shoots to different extent in different markets? Absolutely.
Can you
So
give me an anecdote, just what you mean in terms of that? What's a transactional type of story versus a contextual? Just illustrate this for us so we know a little more clearly about what that means.
Sure. So, I guess 16, 17 years ago, I co-founded a company called Travel Guru, which was, which became one of the largest hotel consolidation platforms in India and Southeast Asia. Now, the digital payment rails weren't very well set up at that point in time. So you kind of come to our platform and go through the discovery process, put in all your filter criteria, and you get your choices of, what hotel you want to book, or the likes. In the beginning, in fact, my own father has come to our office to make a payment after making that booking. So it was that broken, right? Of course, it got better with time. You had credit card integration, so on and so forth. But today, it's become so seamless that this whole commerce and fulfillment of this transaction, I don't even need to go to a travel website. I might actually be in somewhere on the net, and based on the fact that I want to sort of book a flight to Dubai, I might actually get a contextual option,
Okay.
and be able to book and fulfill that transaction with 7 different kinds of payment options on the website itself. I mean, that's a very rudimentary example, but that's the way we are seeing the world change.
And that context, let's put your contextualization into the broader context of the financial models this involves, i.e. embedded banking or other types of things, that sort of API connectivity between banks, fintechs, consumer companies, and so on. Where do you like to play in that theme? And is that the primary theme, or are there other ways from a fintech perspective to play this contextualization story that you're talking about?
Yeah, great question. I think we'll probably see contextualization in a few different ways. Right? I think definitely with digitization and evolution of digital commerce, we are going to see contextual solutions in the context of digital commerce. Having said that, even in traditionally non-digital supply chains, like I spoke about the agri example with Arya, we are seeing a similar example across an export import supply chain theme in one of our portfolio companies. We are seeing a similar theme across mobility company in our portfolio, where we are starting to see embedded solutions for their consumers and for their drivers. So there is a digital contextualization, and then there is contextualization in traditionally non-digital platforms, where there is some combination of digitization and fintech being presented in that context to the consumers. Not that we are completely digitizing the entire value chain, but there is a role in which you can, where, as you said, you can enable solutions where the APIs talk to each other, and the financial solution can be provided as a part of the existing supply chain, a value chain journey.
Right.
So we are seeing both
Okay.
on digital and non-digital fronts.
I'm not going to let you off the hook. I asked you earlier, what are you not investing in? What looks unattractive in this environment? So I'm chasing that
Yes.
one down. So Ganesh,
No, no, absolutely.
tell us what looks dodgy or difficult right now.
Yeah, I think I wouldn't pick as one specific theme, but I would say broadly there were a number of consumer opportunities, whether it's in payment, whether it's in wealth, whether it's even in consumer lending, where we saw very aggressive action over the last 3-4 years leading up to beginning of 22, where in some cases even the basic principles of finance were rewritten, where the people were sort of acquiring eyeballs. Even for credit solutions, they were actually giving cashbacks and discounts to push the credit solutions through to the consumers. So fundamentally, business models which fundamentally believe in attracting a lot more eyeballs and getting market share, and then we are saying that we'll figure out a way to solve for monetization and profitability, I think are a strict no-no. They've always been a no-no for us, because in financial services we believe that you can clearly have an articulated business model, revenue model from day one. And day one necessarily doesn't mean day one, but we shouldn't be applying classic principles of, let's say, what we have seen in e-commerce in several cases to financial services. It's a lot more regulated and clearly articulated exchange between a consumer or a customer and a service provider. So there are a number of consumer models which we have been cautious about in the past and continue to be.
Can I just to make sure I understand the way that you're presenting that argument is, you would say that, say, a super app type gambit might still be appropriate in an e-commerce or ride hailing or some other broader use case, but a super app from a financial services point of view, you're saying is probably going to be unprofitable and unsustainable. Is that fair?
That's close. I would say it slightly differently, which is, even if you look at ride hailing, and in number of countries in Asia, we have examples of that. The jury is still out, at least in 8 out of 10 markets, on whether you have been able to build anchor super apps around, let's say, ride hailing platform. And in number of our countries, in South Asia and Southeast Asia, we have seen companies try and fail. Beyond the top 1 or 2 which we can name, most have found it challenging still. And it's a question of, what is your ARPU, how big are the ticket sizes, how consistent is the engagement and retention, and what's the value you get out of it for a small average order value or ARPU, and the compared to the fixed cost infrastructure and the variable cost you need on top of it to deliver these services. Right now, the other thing I would say to kind of slightly tweak what you said, is in a way a financial services super app should be a bank. So if you are building a digital bank, if a quality digital bank, which is a debate on its own on where it's being built well and where not, but if you are building a quality bank, in some ways that is sort of providing a broader set of financial services, and either they're providing a lot of them themselves, or anchor services themselves and becoming aggregator of remaining services, but providing holistic set of services. So in some ways, when we talk about super app in financial services, one can push back by saying, hey, what do we think a well-run bank is or should be?
Okay, so that could just be that could easily be a DBS or an HDFC or one of these, or an ICICI that does a better job of digitizing their existing user base with all the different services and add-ons that they have, as opposed to someone trying to stitch together a bunch of fintech ideas and then either get a license or call it something, but walks like a bank and talks like a bank.
Yeah, so yes, but I would just qualify it by saying, so we have about 6 or 7 digital banks in our portfolio. A number of them are licensed, and the remaining are in the process of getting licensed. And they're built sort of their core banking, their digital delivery platforms, everything from scratch, right? And build their customer base from scratch. Building open banking APIs to be able to integrate with various services. So I definitely feel that there is room to create powerful digital banks, because existing banks won't be able to dramatically change themselves to completely cover banking in a new world comprehensively. And there will be room for everyone. It's not winner take all business, but I'm clear that new models will get created. Having said that, I think we are not sure it will get created with a super app kind of mindset, because that's a different commerce and transaction kind of mindset to digitization.
How much of what you look at in the fintech world, Ganesh, is as an investor, you investing in sort of hard tech IP, really new, innovative stuff, or is the innovation coming from business models, perhaps taking business model disruptors from China or the US or other places and adapting them for conditions in emerging markets, or taking other emerging markets as inspiration? But essentially, it's just trying to make more efficient what you've already got to deliver, to get easy wins essentially in places that are underbanked or have not been sufficiently connected in the past.
Yeah, it's a great question. Because I think over the last 15 to 20 years, in the time span that we have experienced this as individuals and as a firm that we started now 8-9 years ago, we have seen it change dramatically. Right. So there was a period when I started my venture career in the Valley with Greylock Partners, and obviously we saw pretty varied tech, from applied technology to very deep tech. And then I was also on the board of a number of microfinance companies which went public, and that's kind of as non-tech as it gets, right? And we saw first version of fintech in a number of emerging markets 10-12 years ago, where they were really more about applied tech of some models which are working other places to see how we can fast forward. The last 10-12 years, I would say there's been dramatic change even in infrastructure and public infrastructure, right? Like if you take India, the UPI, unified payment interface, the whole India stack, like digital locker and paperless layer, and the digital ID stack, etc., has been built from scratch and is ubiquitous today. Like I haven't carried cash in last 2.5 years in India. I only carry my wallet and cash when I travel now, but I got to remember that, hey, this is not going to work everywhere. QR doesn't work everywhere, right? So just fundamentally, the infra has changed in a number of these places to varying degrees. I mean, you're seeing similar changes in Indonesia, in Philippines, in Nigeria, in Brazil with Pix, etc. So the ability to copy models is gone. And that's great, because founders who try to copy models from supposedly other successful countries, they have to literally redo things. But if your mindset is I can copy and make something work in an emerging country, that's slowly fading away. Especially in a number of the markets we are active in, like India, Indonesia, Brazil, etc. So, and that's also giving an opportunity to be able to create some very interesting deep tech models, building on top of this public infrastructure. So we have seen an interesting shift over the last, I would say, 8 to 10 years of building for the respective markets, and building sort of originally for the respective markets. It could be applied tech or it could be deep tech, and we kind of look at both, even though I would say it's more applied tech and really stitching together innovative business models. But these business models are truly built for these markets.
As a global emerging markets VC, Ganesh, are you more interested in opportunities in countries that have developed this kind of public digital infrastructure? Does an India with UPI give you more to play with than a large emerging market that just doesn't have that kind of public infrastructure?
Yeah, great question, and something we keep debating all the time. We have now, having done this for a while, and with our vantage point of seeing these 14 plus countries we invest in, we understand that an opportunity set in each country. And by the way, a number of our companies are also regional companies, and some are even global. right? So they're not all necessarily country specific. So there is that dynamic as well. But we understand that the evolution of maturity of a market has multiple different dimensions. The public infrastructure is one of them. And these things move at different pace in different markets, but at each point we are collectively trying to see what is maturity of a market against the opportunity being presented to us in the market, and is it worth taking a bet. So I wouldn't say we would only look at one versus the other more, but yes, naturally there's a reason why India, Brazil and Indonesia are our top three markets. They're probably larger markets and they can be standalone markets on their own, and there is also evolution and some maturity in tech and digitization of infrastructure. So
Yeah.
in some ways, yes, but we don't necessarily differentiate on that dimension.
You touched on a few of your portfolio companies are cross-border. Is this public infrastructure that countries like India build? We're seeing it, other connectivity throughout the Southeast Asian marketplaces, and maybe via Singapore, some connections between India and Southeast Asia. Less so perhaps to Africa or Brazil, but are you seeing more companies able to take advantage of this to be international players, maybe at a regional level, but at least not just limited? And is that because obviously that scalability is important to a venture capitalist, right? In India, it's big enough maybe that you can be happy with a company that just plays in India for a long time, but ultimately you want, I assume you're looking for stories that can really become regionalized or globalized. Is that getting easier? Are we getting to a point where there's more of a regional dimension to fintech companies?
Yes, absolutely. It's a very, very good point. I think as we are seeing evolution of infrastructure digitization, as the regulators talk to each other more, as tech and tech-driven distribution platforms become more table stakes, it leads to more standardization across the markets. And to that extent, you're absolutely right. We are starting to see companies which are a lot more ambitious now than they were 7-8 years ago. And even in the last 5 years, we would have seen companies which will say, "Hey, I'll do well in a big market and then sort of do sub-regional or regional." Today, we are starting to see companies which sometimes from day one have a plan to go regional, and in some cases with infrastructure solutions go global. But at the same time, they realize global doesn't mean as a startup you have the ability to be in 12 markets in 1 year. But
Right.
the vision helps you build foundation infrastructure product from the point of view of being able to extend it when you want to. And we are very much seeing the thought process shape up quite rapidly in that direction.
Finance, though, in its various forms, is heavily regulated often, and of course that regulation is country by country. So how much of a barrier is that to being able to scale outside of one's home country? Is that getting easier, or is it still the same challenges as before?
Yeah, that's a tough one. I don't envy the regulator's job. It's getting complicated. Obviously, technology's added a whole massive dimension to digitization of finance. I'll stay off the crypto discussion because that's a conversation on its own on how you regulate and all of that. So I don't envy the regulators. It's a challenging job. Having said that, I think has it net gotten better? Yes. Has the scrutiny generally gone up? Absolutely. But has it gotten better to kind of say, look, if I'm regulated in one country, if I'm regulated in India, let's say, for let's say an onboarding KYC or fraud detection solution, with similar principles, can I get accepted by the regulators in Indonesia? The answer today is more likely to be yes than it was 5 years ago. So has it gotten better? Yes, but it still has. We have some distance to cover on that front. It's not smooth,
Right.
obviously.
Right. Last question before we wrap up, and thanks for your time. When we talk about emerging markets, we're often talking about financial inclusion is a big driver. How much of that plays, and ultimately, how lucrative can financial inclusion as a business target be? Because it gets talked about a lot, and of course,
Yes.
we are seeing improvements. But at the end of the day, we are talking about the lower end segments of any given marketplace. They might be very large, obviously, in places like India and Indonesia, very large, but nonetheless, are these places where, your LPs are going to expect you to be, knocking it for six? Is that really possible when you're dealing with a heavy financial inclusion program in your portfolio?
Yeah, I'm so glad you asked that question. So I'll give you 3 data points why we believe in this. Aside from my first comment, which is the fact that I wouldn't be doing this if we truly didn't believe it. Obviously, I've bet my career on it. But on a more serious note, within the Quona partnership, we have been part of the 5 largest microfinance IPOs. That microfinance ever saw, and these are ranging from sort of couple of 100 million to about 10 billion in valuation, right? And 4 of those are today, actually all 5 are banks in their respective markets. So one of the things we fortunately learned early, about 10 12 years ago, when we were right in the middle of experiencing this, is that if done with a lot of focus and with the right execution, focus of products, execution and distribution, there is scale in this space, and you can hopefully with scale be able to deliver a very a commercially successful solution. The other dimension to this also is that in most markets we are in, whether it's Nigeria, India, Philippines, Thailand, Indonesia, Mexico, Brazil, anywhere between 60 to 80% of the target segment is what could be defined as not well served. Mm-hmm. Right? This is lower middle class and below. And this is a vast segment. In reality, one day we hope this segment won't be called financial inclusion or impact segment. This is the real deal. I mean, this is majority of these countries. So we believe that with that kind of scale, it's very much possible to be able to create commercially viable solutions. And the last bit is, with the digitization of the world and all the tools that I talked about earlier, the solutions being designed for these markets are not necessarily the same as what we have seen traditionally, which is also why, if you look at Quona, we are proud to have who is who LPs, right? We have some of the most well-known Fortune 100 financial service institutions as LPs. We have some large sovereigns, pension funds, some of the best-known foundations, etc. And we are proud to say that they all believe we can be this conduit between sort of the impact financial inclusion world and the mainstream commercial success world of startup, and that's the conduit role we are trying to play. So we absolutely believe in that.
Great. Well, Ganesh Rengaswamy, thank you so much for taking some time to speak with me at DigFin VOX.
Thank you very much, Jame. Really appreciate this and wonderful conversation. Thanks so much.